afternoon, everyone. Welcome to our webinar today on AI for finance leaders, brought to you by Northeastern's Institute for Experiential AI. I'm Kevin Sanborn. I lead our partnership and collaboration efforts for the Institute and Financial Services, and happy to be your host today. I'm just going to take a minute to take us through our agenda, and then we'll get started. So, first of all, we're going to hear from three speakers today. The first, Dr. Usama Fayyad, is our executive director, and he was previously the global chief data officer at Barclays Bank in London. He's going to speak with us about overview in AI and financial services. Then we're going to hear from Professor Yakov Bart on improving customer experience with AI. And lastly, we're going to hear from Professor Felipe Cortez on the intersection of blockchain and AI in banking and financial services. Usama is going to come back and talk about some of the key themes that we've talked about today, and then we're going to leave about 15 minutes for Q&A at the end before wrapping up. So with that, I just wanted to introduce Usama. In addition to being the executive director for our institute, Usama was previously the global chief data officer at Barclays in London. Usama was named the first person to hold the chief data officer title at Yahoo when they acquired his second startup in 2004. He founded the Machine Learning Systems Group at NASA's Jet Propulsion Laboratory. Usama was chairman and CEO of several startups, including Blue Kangaroo, DMX, Digimine, and he continues to hold the office of chairman at Open Insights, an AI consultancy he founded in 2008. Usama has published over 100 technical articles on data mining, data science, AI, and machine learning. He holds over 20 patents and is a fellow of both the Association of the Advancement of Artificial Intelligence and the Association for Computing Machinery. Usama earned his doctorate in engineering and AI and machine learning from the University of Michigan, Ann Arbor. And with that, I'd like to hand it over to Usama to give you an overview of AI and financial services.
Thank you, Kevin. I'm trying to get the webcam going here. Okay. Thanks very much for the introduction. And welcome everyone to the webinar. We have a long agenda today, and we'll go fast through it. We'll be happy to share slides later in case we skip material that you think is interesting. So what are we going to cover? Well, the fact is, making AI work correctly is one of the grand challenges facing us today, and you hear a lot about it in the news, especially recently with ChatGPT and generative AI. We'll talk some about that, of course, but not much. This was all driven by digitization, which, of course, through the pandemic was accelerated. AI, everybody believes it's the next frontier for accelerating knowledge worker productivity. I also believe that deeply, but it needs to be done carefully. What is not as much emphasized is that machine learning is the dominant part of any working AI, including generative AI. And machine learning has a huge dependency on data, and many people are not paying enough attention to data. So the lost themes are both data and the human in the loop when it comes to making AI work. So despite data being so essential, most organizations struggle with making it work as an asset. The AI haves, the companies who are doing AI, the Googles, Microsoft, Open AI, etc., Facebook, Amazon, they capture every bit of data and the context around the data and the situation. They capitalize and capture every human intervention because these guys know that the human intervention is the only way to kind of keep the algorithms on track. And the ability to leverage this data through machine learning to automate the determination of the right action in the proper context can only be enabled if you're capturing that data. What about the human in the loop? Well, intervention is probably the most valuable asset. And like I said, these guys invest a lot in the human in the loop story. So for a minute, what is experiential AI? Experiential AI is our code for a human-centric approach to solving real problems in real contexts, very different than kind of typical academia, with a human-in-the-loop emphasis, because we don't believe reliable AI can be achieved without it. In fact, all the evidence is showing the fact that human intervention is a must and it's a great opportunity for knowledge capture and machine learning. That said, just as a quick example, since ChatGPT is on all our minds, there's much pure speculation that, hey, this is an artificial general intelligence, and this chatbot is really smart and really understands. Truth is, it does not. There's actually strong evidence of human editorial review is applied. There's an excellent article I referred to here that you can look up about how the humans are in the loop. And with hesitation, OpenAI admits it. By the way, Google Machine Learning Relevance, MLR, is the core ranking for queries. It actually gets retrained 3 to 4 times a day based on editorial input from humans saying, move this up, move this down. ChatGPT, sometimes the queries are answered by humans and often are reviewed and fixed by humans. Same with Amazon recommendations, etc. And this is valuable. We consider that good. Few words about the Institute for Experiential AI at Northeastern. Well, we have a fairly large institute with about 64 core faculty members. These are faculty members whose primary area of research is AI. We're probably going to be adding 10 to 20 more shortly, and 31 plus affiliate members covering all the colleges at Northeastern. So it's a multidisciplinary. We have a team of 12 research scientists and about 30 plus postdocs. The goal is to grow to a large group of research scientists. And it's all about advancing the state of the art in experiential AI in the context of solving real world problems. So for that, we built a couple of organizations. You'll hear from Kevin about them later. AI Solutions Hub, which is all about solving problems, co-working solutions with you, and responsible AI practice, which we think is an extremely important area that's gaining a lot more attention. Now, digital transformation in financial services. You don't need me to tell you it's all over the place, but I like to use this example because many people worry about, hey, is this to replace my job, etc. I use the example of accountants of 60 years ago, right? What was your job as an accountant? You had to have a good handwriting, you had to have good addition skills in your head, and you had to be able to manage these ledgers and do all this stuff. None of which is relevant at all to the accounting of today, right? Today, it's all done through programs and spreadsheets and dedicated applications. Completely different job, right? Has zero to do with how accounting was done before, beyond just knowing the principles, which you need a human to know most of the time. However, we don't have fewer accountants. We actually have more accountants on the planet today than we ever had in the history of humanity. They're just doing work that is much more valuable, much more beneficial to the business, and the robotic parts have been removed. Now, digital and data and AI have been crucial over the years. I use a couple of examples of companies who failed to digitize. Kodak lost the entire business of photography, essentially, including the fact that they invented the digital camera, but never leveraged it. And they went bankrupt after 124 years of being a big, well-known company. Well, that's amazing, right? 124 years. They lived through the Spanish flu pandemic, through world wars, through the depression, through all sorts of things. But failure to digitize actually basically took their business away. Same happened with JCPenney, which is now trying to make a comeback. However, we actually see many financial services firms that took on data, AI, and digitization. Vitality is a great example by Discovery Insurance, where they basically managed to reduce costs by 40% in hospital admissions, 14% cost reductions per patient, and a reduction, of course, in hospital stays by integrating some of the wearables and some of the techniques to have self-reporting and basically saying, hey, here's what's happening with me. Capital One is a famous example. In credit cards, in the words of their CEO, I think it's a bit of a fool's errand to chase digital for the sake of cost reduction. He views it as actually a core capability, and their predictive models are very famous for making them all sorts of money and managing risk and so forth. Finally, DBS is an example I like to use. It's a bank that in 2012 in Singapore was a failing bank. They took on a digital transformation. They took data seriously, and by 2017, they reduced costs dramatically. They grew their income, and they basically became the biggest bank in Singapore. So quite a transformation that's driven by data and the adoption of the utilization of data. Examples, if you think about traditional banks, how they used to be in the past days versus how they are today. Well, front office was very intimate and very, human contact oriented. So you knew a lot of things. You knew the KYC was cheap. In comparison today, like when I was at the global chief data officer at Barclays, KYC alone is something that costs us 300 million pounds a year just to maintain, right? Knowing the customer. The personal knowledge allowed you to make risk decisions, who's worthy of a loan, who's not, who's having trouble, who wants to go to college, all the good stuff. Now it's a challenge because you have to infer that from data, and you have to leverage AI to help you infer it from data. On this point, I don't know if any of you looked at the annual letter to shareholders that Jamie Dimon, CEO of the largest bank in the US, published yesterday. Very near and dear to my heart. The word data was the #1 used word in the letter, 27 times. And JPMorgan claims to have identified 300 use cases at Chase. So again, it's something to keep in mind. But basically, there are many applications of AI in finance. I've listed them. But if you think about, these applications in context, what can you do in the front office? Well, it's about understanding customer context, understanding intent, challenges, issues, reduce the cost of customer service operations, answering questions, and so forth. Next best action, cross-sell, upsell, reactivation, done at scale. In the back office, things like compliance, financial crime, operations, and investment banking, market data, modeling micro and macro and what's going on with the markets, market research and report generation. If you have, investment banks have research teams who publish a lot of reports, and you can think about the role of generative AI there and how transformative that could be. Fintech in general is a redefinition of how we think about financial services. It changes payments, it changes contracts, it changes accounting and bookkeeping, and you'll be hearing about contracts from Felipe later in this when he talks about blockchain. Insurance is being reinvented with the InsurTech and the e-insurance. Instant everywhere latency in banking is disappearing, in fact, and in fact many blame it for contributing to the failure of Silicon Valley Bank because people could move money so quickly. This is, taking over everywhere in many parts of our life, and it's about refactoring of banking. So refactoring of how we think of financial services, as we have known it traditionally, right? It's breaking it down into little elements where we can start understanding the context, tracking and servicing, and so forth systematically. In financial advisory, which you'll hear about from Yakov, this can help tremendously because a lot of the hand-holding can also be handled or aided, I should say, by smart chatbots, etc. Modeling risk and future scenarios are better suited for algorithms often, but you need the human judgment to kind of make sure it makes sense, because one thing I want you to keep in mind is these algorithms do not have common sense reasoning. Generally, they don't have an understanding of the data and what's going on. So why is AI necessary? Because scale is a must, and we need to have algorithms that can gain some form of understanding of what's happening with human judgment. Where do you make the right decision in the right moment? And how do you fix feedback into it and fix it? New capabilities require automation, novel risk assessment, integration into microservices in the networks, whether it's a social network, economic network, commerce network, and many other vital services. One thing to keep in mind that's very important is fairness and bias in algorithms can have big consequences. So financial decisions are much more consequential than targeting ads. You have to be super careful what you decide and how it affects people's lives directly. Algorithms have little common sense reasoning, so you have to overcome that by humans putting the guardrails and ensuring there's governance there that captures the issues. Successful AI is heavily dependent on data. Good training data is very expensive to get. Reliably labeling that data is even more expensive. So, you know, those data, if you don't get the right data, if you don't curate it correctly, you don't balance it, you get these unintended biases and problems, and it can get you into a lot of problems. I'll finish my section here with quick sample case studies in 3 different financial institutions. Here's one we did at Barclays, where basically we wanted to do real-time decisioning, monitor, say, a consumer's spend, and predict ahead of time if they're likely to go into overdraft. And what we did is basically, if we predicted that somebody's likely to go into overdraft, we would send them an SMS message saying, hey, we think you're going to go into overdraft by this date. Click here to help mitigate the situation or do something about it. What's amazing about this is the response rate was 60%. Remember, an SMS campaign with 1% response rate is decent. 2% is like hitting it out of the park. Here it's 60%. 80% favorability rating from a perspective of measuring, you know, how likely you are to recommend. And of course, it got then launched in mass with a major revenue uplift once it was. Digital adoption and personalization, influencing customers to move to the digital channel. We did a similar exercise where we said, hey, you just visited a branch, or you just did this. Did you know you could do it on mobile or web app? And people, the response rate was very high because it was in the moment and it was done instantly. Credit limit increasing while you're shopping. The uptake was 2 times than kind of doing the passive offers. So if you do it in the context at the right time when the consumer is thinking about it, it makes a huge difference. This is an application that we did for customer experience and operational efficiency with a big insurance company in the US. Basically a reduction in call volume by 5%, but we had various areas of application of this technology. And finally, in the financial advisory, working on helping financial advisors make the time consumed by interviewing clients and having them kind of do the annual update, taking it down from 20 minutes to 5 minutes. The customers loved it, the advisors loved it. The duration of the project was 5 weeks. The cost was less than 200K. The returns in the time saved by the financial advisors, and this is not even counting the customer happiness and satisfaction, was about $5 million in productivity gains. And that's a good example of how chatbots will affect the future. You have to have the right chatbots. They have to have the right kind of ability to reason. So the questions you have to ask yourself, and there's many pieces to this, you have a unified view of the customer, of the product, you have the context. And can you capture it? Can you provide data-driven personalization? Is data access democratized? Is data being captured correctly? And can it enable intelligence? These are questions you should be asking yourself if you're thinking about this. With this, I would love to hand it over to Professor Yaakov Bart. Yaakov.
Thank you so much, Osama. I think it's a fantastic introduction, and thank you so much for all participants joining us for this webinar today. So I'd like to continue sort of this line of focusing on customer experience that Osama has started. A little bit about myself. So Yaakov Bart, marketing professor here at Northeastern University. I'm one of those core faculty members Osama mentioned, and I also lead data initiative. Here's some of the institutions that I was lucky to get education and did my teaching and research before joining Northeastern. So what I'd like to speak to you today is about customer experience angle, how financial institutions can leverage AI to improve that. And there are several venues available for financial institution. First, let's focus on personalizing, experiencing, and recommendations. So there lots of data getting created these days, of course, banks, other financial firms, getting data about customers every time they interact with them, either physically or virtually. And so in the early days, when the digital revolution has only started unveiling, the personalization was limited to customization. So you could say, okay, we can have segments A, B, C, D, and then we're going to offer maybe different experiences to them. But nowadays, we can actually offer personalized experiences and personalized recommendation to every consumer, depending on specific context and environment in which they find themselves, to differentiate ourselves from other companies targeting the same customers. So essentially, personalization has moved beyond just ability to address customers correctly, having comprehensive information when customer calls for a service. It moved to something we call today hyper personalization. So instead of clustering customers to segment them and then offer experience that would be different for different groups, nowadays companies can offer hyper customized offers to each consumer, and the same consumer may get different offers, different communication, different experiences, depending in which environment or in what stage of customer journey the consumer finds himself or herself. One example of using AI to improve this personalized experience is Wells Fargo offering AI-powered predictive analytics solution in mobile banking ad. The idea is that customers have lots of information to deal with and lots of different tools to manage their finances. And so the idea of predictive banking is to use AI using customer data to give tangible advice that would help customer financial well-being. So for example, some insight may say, look, you seem to have higher than normal automatic monthly payment. So maybe you need to look into what's happening with this recurring bill. Maybe somebody's billing you a little bit more by mistake. Or maybe reminding customer to transfer money from savings to checking account to avoid possible upcoming overdraft charges. Maybe customer has a bit more money than usual in the checking account, and then they could be prompted by this tool to transfer some money into savings, which might be especially interesting to customers as we see, of course, interest rates going up. So there are over 50 different prompts a consumer can receive in this tool based on the data that the company, in this case Wells Fargo, has collected on customers, and able to use AI tools to offer the best next thing for customer well-being. Another application comes from JPMorgan. As you saw, Usama talked about news announced yesterday. There are many different ways in which JPMorgan uses AI today. I'm going to talk a little bit more about the specific use case where they partner up with Perseido's machine learning tool to create personalized communications. So the key idea here is that turns out that the machine learning tool, AI-based tool, can craft better ad copy than JPMorgan's own writers could create. The communication that generates higher click rates, more than double in some cases, on digital ads for various Chase products such as cards and mortgages. And so this technology has proven to be very promising. It can create new copies, it can rewrite marketing copies, and the sort of message machine can build copy from database from million words tagged and scored for emotional appeal. And so they continue testing and refining this technology for personalized, effective communication to consumers. In the other application, when we talk about agent support and service augmentations, AI technologies could be leveraged to improve operational efficiency. They can deliver much more personalized and better experience for customers. For example, by using sentiment analysis, where natural language processing can analyze past customer interaction, detect emotions, and AI tools can help service agents to understand better current customers' mood and attitude and advise agents maybe to tailor the responses to improve communication and again to improve the customer experience. AI can help with transcribing and analyzing ongoing customer communications, again helping agents with relevant information, recommending solutions in real time, as well as various cross-selling and upselling opportunities, which of course dramatically improve the efficiency of agents providing customer service day to day. There's intelligent call routing that can be done by AI, and another very important and rapidly developing area of AI-driven service by financial organization is AI-powered chatbots that can replace humans to handle a lot of routine inquiries, freeing up human agents to spend their time on a much more complex issues. And so one example of this agent support is product introduced a few months ago by Fargo. It's a virtual assistant that they simply call Fargo, inspired by the fact that a lot of people say they prefer to use virtual assistant for customer service rather than spending time in phone conversation or trying to find a feature among many menu items that I'm sure many of you have got lost when you try to do something with your bank. And so the idea here is that this virtual assistant allows consumers to have conversation about what the customer needs to get done in a specific moment in time. So they leverage Google Cloud's conversational AI platform and use the language processing capabilities to better understand what customers trying to get done and provide a tailored response based on that. And another important application, customer-facing application that a lot of banks and brokerages advancing these days is customized investment device, also known as robo-advising. The idea is for robo-advisors to provide personalized investment advice using data about customers and help customers to create customized portfolios and provide ongoing portfolio management. So how does it work? It's been exploding in popularity. So when we look at the nascent stage back in 2015 and compare what we have now, we see basically 10x growth. Now there are over 100 options available. And the basic idea is that robo-advisors take into account personal preferences of retail investors, such as time horizon, financial gains, risk tolerance. And then based on that, they provide customized automated portfolios based on these preferences by taking into account various factors related to asset class performance, market volatility, and market conditions. So the advantage here by using robo-advisors is that it allows customers to stay on track to achieve individual goals. The obvious benefit to financial organization is that it lowers cost of servicing retail investors. And some organizations try to combine both robo-advisors and traditional advisors together when there is automated, customized portfolio getting created by robo-advisor, but with some professional guidance. When we look at this tool, it seems that that should be working very well. The only difficult part here is to convincing customers to adopt it. And so this is where it gets a little tricky, because when we start looking at the consumer adoption, turns out that this robo-advisor dream of dramatically lowering cost of service is really not working out as planned. And so one of the questions we look at one of the ongoing research projects is why investors predominantly choose to engage with traditional human advisors over robo-advisors, even though there are clear advantages that robo-advisors provide. Our explanation based on the idea of agency. So the agency is something that defined as capability of an entity to act intentionally. The problem in the robo-advising context is that robo-advisors often perceived by humans to be agents that have very low agency compared to a human advisor. And it's a problem because humans tend to make attribution from agency to responsibility. They think, aha, if your agency is low, then you cannot be held responsible. And so we think what we see misadoption or rejection of robo-advisors is because robo-advisors perceive to have lower agentic minds. Because of that, customers, retail investors associate them with having low responsibility for what may happen, and as a consequence, investors are less willing to engage with robo-advisory services. Another research project that I'd like to talk to you about, and of course you'll be able to read about it in an article for more details, talks about broad paradigm about something we call consumer digital signals. The idea is that at the core, at the base of AI-driven opportunities that financial organizations can explore is the data that gets emitted by consumers as they go through their lives. So every time any device is connected to consumer, it collects data, it collects data, it transmits data that can be harvested by companies. So the firm's ability to collect and leverage these consumer digital signals may determine how much AI would then be able to leverage it to deliver personalized advising, personalized experience, personalized recommendation. And so the framework with which I'd like to leave you, so if you look, for example, at the bottom part of this diagram, starting from pre-purchase, consumer may emit various signals. Signals that mean what consumer does online, how consumer interacts with your bank or with your financial firms. These consumer signals can be harvested by purchasing third-party data on consumers' behavior in other contexts. And of course, it needs to be collected, keeping in mind regulatory constraint and ethical considerations. Using this data, then firm makes decision how to use the data either directly collected from consumer or purchased about consumer to personalize experience. One thing that we know from a lot of research studies is that some level of hyper-personalization can backfire because it can be perceived by consumers as being too creepy. So it's possible to go overboard with personalizing experiences if customers feel that the privacy getting violated and they're feeling more strongly about this privacy violation rather than benefits they get from hyper-personalization that get because it gets customized using their own data. And then, of course, this pre-purchase stage going to purchase stage and post-purchase, and then keeps evolving as customer relationship with firms evolve. So I'd like you to leave that with a thought and pass to Professor Felipe Cortes. Felipe, you're probably still on mute.
Yes. Thank you, Jakob. Thank you for attending the seminar. So I would like to thank Usama and the organizers for letting me present here the topic on blockchain and AI. So let me present myself. So I'm Felipe Cortes. I am a professor of finance at the business school. I'm also the director of the fintech curriculum at the business school. So my research is mostly these days in fintech. My teaching interest is in blockchain and robo advising. So that's something that Professor Jakob also is working on. So for today's presentation, I'm going to give you like a brief overview of what the intersection is between blockchain and AI and what the capabilities are for a business perspective. So let me start with the basics of blockchain. So there are many definitions of blockchain, and sometimes the PR is not the best, but blockchain is an amazing technology, and blockchain, the way I see it, is a data management solution. So what is blockchain? Blockchain is you have a ledger, so it can be private, share, or universal. So you have a ledger where you're going to be storing information. The most important use case, at least in my view, is for financial transactions. So you're going to be storing transactions in a ledger. Every time the ledger is modified, every time a transaction goes through, it's going to be timestamped so that we keep track on like who modifies the ledger. And around this ledger, there's going to be a bunch of cryptographic functions, basically that preserves the integrity of the blockchain. So in essence, what can we achieve with the blockchain? What is the appeal of this technology? With blockchain we can transfer, record, and reconcile information in an efficient way. And I would say what is more appealing from this technology is that with the blockchain we can implement something that we call smart contracts or programmable money. So what is that? So once you have a blockchain that has a lot of information in terms of transactions, one can write a piece of code in which, like for example, we specify some conditions, and once the code verifies the conditions are satisfied or not, the code is going to execute. No, so just to give you an example of a smart contract would be, for example, if the S&P is above 4,000 points, I will give you $100. That will be a smart contract. The contract is going to verify the condition. Once the condition is verified, the S&P being above some threshold, the contract automatically is going to send the money. Yes? So now let me link that to AI. So blockchain and AI are sometimes seen as, they were developed as independent technologies, but more and more companies are now integrating the two, and that creates an amazing synergy for the company. So what is that you can achieve with blockchain? With blockchain, what we can achieve is an efficient storage of data, sending data in a tamper-proof way. And with AI, what we can achieve is the execution of more and more complex tasks that are. So when we combine the two, what we have is basically the capability of recording information, having contracts that basically react to that information, and the AI is going to be one powerful element that basically is going to feed the smart contract. No, Usama said it at the beginning. One of the big challenges for machine learning and AI is the data. Well, blockchain is one way to get that data. So once you have the data in a blockchain setting, AI can easily run and have access to that data. No? So let me give you a couple of examples on like where this synergy, like combination of these two is coming into play. In the realm of cybersecurity, so you have the blockchain technology, which basically ensures the integrity of the data. So with cryptography, you can have a record of, for example, transactions. And if you add to the blockchain some AI that, for example, a code that detects threats or, like, for example, fraudulent behavior, you can basically enhance the integrity of your data in that case. Supply chain management. So companies such as Walmart, for example, partnering with IBM, they have a huge blockchain of their suppliers. No, for example, how much coffee, how much rice a supplier is given to Walmart, at which state, what are the ethics of the supplier, all, like, this is ESG and all that stuff. So once you have, like, that information of, like, the supply chain of your company, you can basically take AI and analyze all that data to, for example, increase the efficiency of the supply chain. In terms of financial services, which is, I would say, my cup of tea. So you have, for example, a blockchain where you have a bunch of transactions from customers, secured by the blockchain, and you can add to that AI to, for example, preserve the integrity, like fraud behavior, like analyze, like patterns from consumption from your clients, or, for example, you can basically use use AI to, for example, screen customers and automate decisions within customers. So the example that I'm going to present next is, for example, how to underwrite a loan using AI and blockchain together. So just to fix ideas, to give you an example, so these are the steps in financial services, and this is a process that more and more banks are adopting. JPMorgan is the latest one trying to implement all of this. So this is how it goes. So let's talk about underwriting a loan using blockchain and AI. So the first step is, of course, you have a bank, you have a customer with some, like, fiat currency in the bank. So let's say $100. So the first step is to convert this $100 into a format that is going to be friendly for a blockchain. So this is what is called deposit tokens. This is one of the biggest innovation in banking over the past 2 years, this deposit token. So basically it's transforming or representing the deposits into a format that the blockchain can understand. And then simply the deposit token is going to be sent to a liquidity pool, which is a smart contract. So it's going to be a piece of code that is going to receive the money from customers. Then this is where AI comes into play. So, like, let's say, for example, that we have this pool of money and then someone wants to borrow from that pool of money. So in the traditional world, you have the underwriter, which is going to be like an office and like a person going over like 50,000 documents, credit scores, and all that stuff. But here with AI, we can basically write a piece of code that is going to do, for example, the credit scoring or the screening. Yes. So you have a smart contract that is going to keep the money. And then you're going to put AI on top of the contract to basically screen the borrower. The AI is going to take a look at the information and then is going to fit the contract. If the AI code or the credit scoring says, yes, we should give money to the person, then simply the smart contract is going to be triggered and the contract is going to automatically give the money to the person asking the money. That's the underwriting. So of course, this is almost the end, because once the contract gives the money to the borrower, the deposit tokens, and the deposit tokens are converted back to fiat currency. So in addition to underwriting, these are some of the use cases where, like, the combination of blockchain and AI is very powerful. We can enhance security, so fraud prevention can be taken to the next level using the combination of the two. Anti-money laundering provisions or screenings can be also taken to the next level. Risk assessment, so this is example that I said before. So once you have all the information stored in a blockchain, the AI is going to be easier for any AI to execute the code, and then come up with an output. We can increase the speed of execution. So blockchain, there's depending on the type of the blockchain can enhance the speed of execution. That, along with AI, we can achieve even better results. And what is more important is that with AI and blockchain, companies can minimize fee structures. In the case of banks can reduce the cost of issuing loans. To fix ideas, what I just described is tech that some companies are adopting as we speak. So Figure, it's a company in California. They were one of the first ones a couple of years ago to combine blockchain and AI to produce services. Webster Bank, the regional bank from the Northeast. So all of these banks, they are combining these two, and these are some of the outcomes. So they are underwriting loans in less than 5 days. So I forgot to put it here, but these are mortgage loans. These are home equity loans. No, so these are loans that in the traditional system they take, I don't know, 40 days, 45 days, depending on on the bandwidth of the bank. But here they are underwriting loans in less than 5 days, which is truly amazing. There is substantial reduction in the closing fees, and these savings are passed to the customer, and the delinquency rate is very low for this loan. So this is to highlight some of the advantages of integrating blockchain and AI in financial services. I also prepared an example in insurance. So it follows the same logic. So one of the biggest challenges for insurance companies is basically if you're a customer, you file a claim against the company basically has to decide whether you're at fault or not. And if you're not, then you're going to get paid. Yes. So there are companies now integrating the two in the realm of insurance. So you can think of having a smart contract where all the money is sitting. And then you're going to tell the contract check if, for example, the customer claim is valid or not. Yes. If it's valid, send money. If it's not, don't give the money. Yes. But of course, the issue is how does the contract verify that the claim is valid or legit? So this is where AI comes into play. And where AI comes into play, basically the algorithm can basically screen the information, produce an output, give the output to the contract, and then the contract is going to execute. Yes. This is, for example, what Lemonade is doing to some extent. Yes. With that, I will stop and give back to Usama.
Thank you. Thank you, Felipe, and thanks everyone. Can we move the slide, please? Oh, there we go. Okay, so just concluding remarks, and we really want to hand it off to Kevin and Q&A. My quick concluding thoughts here is this is a recap of the themes. AI is becoming an imperative. Customer experience is a key business driver. No data, no working AI. Take my word for it. Impossible. Digitization can get you 10 to 100x more data. Good news for AI, perhaps, if you can manage that data. Blockchain, as you saw, adds a lot more data and flow logs. And the digitization of smart contracts and transactions gives you a lot more context. Again, where do you capture that data? How do you model it? Getting the data and the context story right is the key enabler for business insights and for AI. And there is a rational approach to getting to data assets and capturing the valuable human information and interactions. That's where experiential AI comes in. That's where we would love to kind of work with you on problems like this. The dynamics of AI applications, it's highly dependent on ML, machine learning, and data science. Machine learning is highly dependent on data, duh. And AI applications are subject to bias, unreliable data, and serious brittleness in the face of challenges, which means you have to think about responsible AI. You have to think about where you could get in trouble without even intending it. What's the most expensive part of building a working AI application? What do you think? Well, it's actually getting clean data, carefully selected data, and labeled data. What is the most critical dependency on keeping the AI application working? Human intervention, course correcting the algorithm all the time, much like what happens in the Google search engine or ChatGPT, etc. So with that, I'll pass it over to Kevin for the Q&A.
Thanks, Usama. I appreciate all of our speakers today. It was great to hear from all of you. For those in the audience, if you have a question, there's a question box on the screen that you can go ahead and type that in, and we can get questions to our speakers today. In the meantime, we did have a couple questions submitted ahead of time, so I'm going to start with those, and we'll go from there. The first one, Usama, I think makes sense to direct to you. The question is, with all the talk about ChatGPT and generative AI, Can you talk about how those tools can best be applied to make the biggest impact in financial services, and what are the risks of using those tools?
Yeah. So this is, of course, a big topic, and I can actually literally speak for hours on it, especially these days. And I have been doing a lot of talks on the topic. So let me say kind of the big takeaway. The big takeaway is for knowledge worker type work, this technology, if used properly, can essentially accelerate, in my opinion, 70 to 80% of the work. So instead of starting from scratch, whether you're writing a response to a customer, whether you're writing a contract, whether you're diagnosing something, etc., you can get very quick part of the work done. But then you need to check it. Why? Because these algorithms, as I mentioned, are highly sensitive to the data you feed them. Simplest example, if two documents in the corpus that gets used to train the large language model, if they say two different things, the algorithm actually ends up taking whatever is more frequent to be the truth. It also, so that means, misinformation. If you actually want to get a wrong message out, just feed it a lot more documents more frequently, make them appear on the web or wherever, and suddenly this thing is off course. The other thing to think about is these chatbots fuse the information, so you never know where it's coming from. And they often essentially exhibit what in the industry we call hallucinations. They make stuff up, which is why you need humans to check what they produce. And again, you benefit from the 80%. And by the way, this happens also in programming tasks. Microsoft has an application they call Copilot, which is GPT-3 applied to the collection of all the programs that get checked into GitHub, which they bought in 2018. Well, guess what? This thing, you tell it, write me a program to do X, and it will do that. But it has no understanding. It's regurgitating. If your X is different, and typically it is in programming, you have to go in and figure out that, hey, it didn't get it, right? So it's good. It generates most of the generic program. It cuts down the work by 50 to 80%. But now you as a programmer have to go in and edit that program and fix it. So what we say here is huge productivity gain. We will see it in almost every knowledge worker job. It will accelerate, but it will not remove the need for humans. I always say when asked, is AI going to replace my job? My answer is no. A human who uses AI will replace your job if you're not using AI. So doctors who use AI will replace doctors who don't. Lawyers who use AI will replace lawyers who don't, and so forth and so on.
Great. Thanks, Usama. The second question we have is for Yakov. Yakov, you talked about using AI as a virtual financial advisor. Given that financial advisors are often dealing with people's life savings, how can we ensure that the AI is giving the right advice, and does the benefit and the productivity of a virtual advisor outweigh the risk and liability to the financial institution using it?
That's an excellent question, and there are several recommendations that I would suggest to keep focus on. First of all, as Usama mentioned, it's really important to use high quality, robust data and algorithms that are well designed, gets tested, and regularly updated. If you're using some algorithm without continuously updating, then your customers using this robo-advising solution can get in trouble, especially given highly volatile conditions that may occur in markets. The second advice I would give, you need to implement very robust security measures to make sure that the data that gets exchanged and used by robo-advisors not going to get leaked out. Also, of course, as I've been discussing in the model why consumers may not trust robo-advisors, the idea of responsibility. There needs to be clear, transparent communication strategy that divides responsibility between the company providing robo-advising services and consumers ultimately making decisions. So consumers are not getting surprised at the end of the day, sort of where this responsibility falls. And finally, I think we see, and I think continue seeing more and more often, the idea where we're going to have robo-advisors with a human oversight. And the idea of the human oversight is to monitor, review, and intervene when necessary. And I think when focusing on these recommendations, the company would be able to achieve a necessary balance between risks and benefits of using the solutions for customers.
Great, thanks, Yakov. Again, if the audience has questions, feel free to just type it into the box on the screen. The third question we have, I'll put this open to whichever one of you guys wants to take it, but the question was, can you comment on the AI implications for risk management? I guess I can think of a lot of different contexts that AI can be used in risk management, but I'll let you guys chime in where you see fit.
I mean, just because we're running out of time, I mean, first of all, I would encourage the audience to continue to put questions in and to question on the social media. We will give you answers on the social media, on LinkedIn and elsewhere. But what I would say on risk management, this is, of course, a huge issue for banks, insurance companies, almost every financial services firm out there, payments and so forth. This is essentially an extension of human capabilities, an ability to kind of monitor more data, gather more information, go more granular, and then get feedback from human risk managers to correct whenever the algorithm is guessing wrong. I think you can get algorithms to guess right most of the time, and if you're checking them and giving them feedback, they'll get better and better and better if you have that data capture and machine learning group going. I'll leave my colleagues if they have further answers to this great question.
So in the specific case of banking, so one of the issues of banking is that banks need to have a liquidity provision. No, like banks, when they issue a credit card and when customers take the money out of the bank, they need to have some reserves on the side to prevent some shortfalls of cash. No, one simple application of AI is basically to predict, for example, the use of liquidity and to basically minimize the amount of liquidity that banks need to have on hand. No. That's one like easy application of like AI on risk management. The other one is, of course, like for example, fraud prevention and all these safeguards that banks are having on credit card users, for example. And this is monitored like 24/7 by like AI to basically minimize like losses for, I guess, merchants in this case.
Thank you. Well, we're just about wrapping up here, so I just wanted to take a minute at the end to thank our speakers for your time today. Thank all of our attendees to the webinar. We're excited to work with you on your problems. As Usama mentioned at the beginning, we have a great staff at the Institute. We have over 90 core and research faculty with expertise ranging from NLP and large language models to climate change and geospatial data. We've got a team of data scientists in our AI Solutions Hub that can help solve problems for our partners. And we have, as we mentioned, a responsible AI practice focusing on how to help companies with an ethics framework around use of data and use of artificial intelligence and addressing issues like model explainability and model bias. So we would love the opportunity to talk with anyone in the audience more about their most challenging data problems and figure out how we can help. So please feel free to reach out. Everyone in the audience will get a thank you email for attending, and in that will be information on how to connect with us if you want to speak with us further. Thanks so much, and have a great day.